Good morning and happy Saturday. This is Raj from ShareTreck, and today we are going to talk about Caribou Biosciences. Try to gather as much information as I could and keep this presentation short and crisp. So let's get started. Let's talk about the company profile. When I look at Caribou Biosciences, the way I look at the company is that it's a clinical stage biopharmaceutical company which is engaged in the development of genome-based allogenic cell therapies for the treatment of solid tumors and hematologic malignancies. That is their core area. This company was incorporated in 2011 and headquartered in Berkeley, California, and you would have guessed it, Jennifer Doudna is the co-founder of this company. And it's also serving as a channel to provide CRISPR-Cas9 license. It has collaborations with AbbVie Manufacturing company to develop CAR T-cell therapies. A part of its revenue comes from there also. And this company is focused on three things the way I look at it. One is using an allogenic approach. Second is using CAR T-cells. And the third is intense focus on being able to boost the persistence of CAR T-cell anti-tumor activity within the body. In order to do that, they knock out certain genes. We will talk about that subsequently in this presentation. But that's what very briefly describes this particular company. And if we were to look at the profile further, I would like to talk about their equity distribution. Institutions hold 42.7% of their shares. So when institutions hold a large portion of shares, there is positives as well as there is negatives. The positives are that there is going to be a lot of stability because it's a huge bulk amount of shares are sitting with an institutional investor and it's not being traded. So it takes away that many shares from the market. So that is in a way very positive for the company. However, if things were to go bad and if the institutions felt that it was not a good investment, they wouldn't hesitate to drop all the shares even if it's at a loss and move on to the next opportunity. So that's the negative of having a huge proportion of institutional investors. So that said, the general public only owns 29.2%. People like you and I, retail investors, we hold only 29.2%. So it's a very small float that we are working on in the market, whereas 42.7% is literally sitting there on the books. And if you look at the other breakup, you have individual insiders who hold 5.1%, public companies hold 5.2%, venture capital and private equity firms hold 5.5%, private companies hold 5.5%, and hedge funds hold 6.7%. That makes the total holding of this company in the market. And if you were to look at their platform, it's called as chRDNA. It's a significantly improved genome editing tool, and it manages to get fewer off-target or off-base edits as compared to CRISPR-Cas9, the original generation, or vanilla as I would call it. It has got high efficiency gene knockouts and insertions, and it enables robust multiplex editing with high genomic integrity. And they use this to knock out certain genes in order to make sure that the CAR T cells can persist in the body and continue their anti-tumor activity for a longer period of time. And the chRDNA platform is able to provide genome editing across cell types, including immune cells and stem cells. So it's got a wide range of cells on which it can work. And it can be done, it can be manufactured using chemical synthesis with readily available technologies. So it's not very difficult for them to produce chRDNA guides. So that said, this is their main utility as a company, chRDNA. And in terms of their pipeline, there is only one candidate that's in advanced stage, that is CB010. I've spoken about it in my previous video about CRISPR therapeutics and Caribou Biosciences, where I compared both the companies because we got clinical trial data from CB010 and it was very, very promising. So I think that's the star among their pipelines. Everything else is in the earlier stages, and it's not very significant at this point of time from a monetization perspective. CB010 is the major therapy that I would be concerned about. And in terms of NK cells, as I mentioned earlier, they are not in any advanced position. They are in the discovery stage with CB020. We have to see IND enabling happening and then it going into clinical trial. So I don't know how long it's going to take, but that's where they are. And in terms of financials, they got 390.8 million in cash equivalents, and marketable securities as of 31st March 2022. And their Q1 2022 earnings from licensing came to $2.7 million, and other income came from 1.8 million. Probably this could be their work on CAR T cells for AbbVie. And earnings are forecast to decline by 25% per year for the next 3 years. Revenue is forecast to go 33.04% per year going forward. That's the expectations from the street. In terms of Q1 2022 expenses, R&D expenses came in at 13.9 million. General and administrative expenses came in at 9.6 million. Net loss came in at $19.1 million. Caribou is forecast to be unprofitable for the next 3 years. And in my opinion, for companies like Caribou Biosciences, CRISPR Therapeutics, trying to compare Q1 spending with Q2 spending with Q3, that I don't think would give us any kind of clarity on what is happening, because there are many pipeline projects going on. There are a lot of other activities. It's not like a regular company like, say, Apple, which is producing iPads, and there's a distributor network, there's a manufacturing network, supply chain, everything, and you can start comparing quarter to quarter. That's not the condition with these companies, so I wouldn't compare it with previous and next quarters. But suffice to say, they have sufficient cash in their books to continue their operations until they get some kind of an approval for one of their therapies, preferably CB010. And when we look at their financials, you will see that their assets is around 368.01 million, which is more than enough to cover the short-term liabilities. So short-term assets is way more than the short-term liabilities. In terms of long-term assets, they got $77.9 million as against the long-term liability of $47.53 million. There also they are pretty well covered. So overall, I would say strong financial health. Assets are more than sufficient to meet the current and long-term liabilities. So this is a good thing to have in the company. In terms of analyst coverage, we don't have that many analysts covering, and most of the analysts who are covering the company are somewhat bullish or bullish. Nobody's bearish about this company, and the target price from analysts average to around $27.8 depending on where you look. But that's generally the ballpark. So it indicates a lot of upside for this company going forward. But there is going to be time that is needed for it to get to that stage, and that could range from anywhere from 6 months to maybe a couple of years. So it's a waiting game out here. In terms of recent news, the chief scientific officer exercised options to buy US $643K worth of stock. Now this shows a great deal of confidence in the company. If the chief scientific officer is exercising options to buy these shares, there could be other reasons why they are exercising the options, but I would like to believe that it comes out of a great deal of confidence in the progress of the pipeline items and the outlook for the company's technology and prospects. They announced positive initial data for CB010 anti-CD19 allogeneic CAR T cell therapy. The anti-CD19 is what provides the prolonged life for the CAR T cell within the body to continue its anti-tumor activity. So that's a very, very good news for this company. And we spoke about this in our previous video. If you have not seen that, please go to the channel and look for a recent video which talks about CRISPR Therapeutics and Caribou Biosciences and compares them. So it was published maybe a week ago. So you'll find more details about this out there. David L. Johnson was appointed to its board of directors recently. David is a veteran in the field and is an alumni of GlaxoSmithKline and also Gilead. He brings with him a lot of experience on launching therapies and drugs and getting it into the market and making it reach the patients. So he's the right person at this point of time with a lot of the right skill sets. So that's again a very good addition in my opinion for this company. And in terms of final thoughts, I would say that overall market is lower in lower value multiples right now. So if you look across the board, whether it is Apple or whether it is Tesla, all those companies which are in lofty multiples, they have all come down significantly. And if you look at Caribou Biosciences, I think it is very, very inexpensive. And if you were to just multiply the float of shares which are available in the market for this company with the share price, which is around $8, we come to $361.5 million as the total cost of buying this company. But if you look at the balance sheet, I'm just going to go back to the balance sheet, and you can see 390.8 million in cash. So it is going to cost much less to buy all the floats than there is cash in the company. So this is a very good company to buy, because there is the intellectual property also with the company, and the progress that has been made in CB010 and other therapies. All of that is worth something. So put it all together, I would say this company is fairly valued at this point of time. And if there is risk-taking capability, and if it is bought in the right proportions, if you do a proper balanced portfolio and you allocate a small portion of that for Caribou Biosciences, I think it would find a place in the portfolio, in my opinion. Of course, you have to do your own individual research before making any investment decision. This is not financial advice. This is just my opinion of what I am thinking. And if I was to look at the current scenario, we have high level of volatility, and as I mentioned in my daily update videos on a regular basis, we are likely to go through a consolidation phase once we hit the bottom of the market. I think we are at the bottom of the market. So the consolidation will be a few days of going up, a few days of coming down, a few days of going up again. So when we are able to track two lines, which one is for resistance and one is for support, within which the price starts consolidating, and that's when it would be advisable to do swing trading and also start dollar cost averaging, so that the best possible value can be achieved in buying this share. So at this point of time, the volatility is going to prevent this share from getting its fair value for the near term. But once the volatility subsides and risk-on behavior gets back into the market, at that point of time, this company is definitely going to gravitate towards its target price. Wholly owned therapies would be the best future source of income for this company, and their CD19 also, if it works out, will give it an extra advantage over other companies' therapies, because the cancer or tumor killing cells will last longer and give better outcomes for the patient. So that's another thing that I would like to mention. CRISPR IP verdict is a contingency risk for this this company. I would probably expect to see on the balance sheet a contingent liability portion if there is any monies to be paid to Broad Institute in case the federal court appeal is lost. Then those things have to go in as contingent liabilities. They have to find a place somewhere, so we should not lose sight of that at this point of time. Those are my final thoughts. Now, if am I going to buy Caribou Biosciences? I would wait and see what happens with this market. And if I had an opportunity to buy something, I think my first preference would be CRISPR Therapeutics, and my second preference would be Illumina. Probably I would like to diversify into a bit of hardware and solutions side, and also look at base editing and pick up the base editing company, a small portion. So that's what I would ideally like to do. But as I mentioned before, my strategy at this point of time is to go for the established stocks like Apple, Tesla, Google, Microsoft, Amazon, and ride them the way up, and then use the profits to reinvest in CRISPR shares. And I don't mind catching CRISPR shares, dollar cost averaging on the way up. So that's my thought process. You have to formulate your own approach and decide how you're going to handle the opportunity that the market is presenting. It's always wise to have a diversified portfolio and have small portions for each niche areas, so that if anything doesn't work out, you're not totally lost, but only a small portion is taking that risk. So before I finish this session, I would just like to take a quick look at the charts because I'm seeing something interesting here. So if you can see this chart, all these candles are a daily candle, and we have fallen below the debut price of Caribou Biosciences. And at this point of time, we are forming some kind of a support line. I have got 2 contact points here. We also have a red line of resistance up there at 10.04. So today we have ended at this line of support, and that's why I was able to connect point 1 and point 2 to create this new line. So when the market opens on Monday, if we go up from here, then we are waiting for a third point to validate the upward movement. If it goes down, then we are still looking for consolidation, where the red line can be the resistance on the top, and there could be a green line at the bottom, which connects lower lows and forms the support. And that kind of would show us a consolidation pattern. And what I am seeing here is potential formation of a bullish channel. So we'll have to see how this pattern emerges as we go ahead. And if you look at the MACD, it doesn't provide much of a clue because it's tending towards a signal line in a bullish manner, in a bearish manner. And the momentum is absolutely on an average, right bang in the center. So there is no clues out here. But I think if we wait for a week or two, we'll start seeing some patterns. Either it would be a bullish channel for these stocks because it has been beaten up so much, or it could be a horizontal consolidation or a mildly bullish consolidation. Let us check it out as the time goes by. So with that, I would like to end this video, and I hope you liked this video. If you did, please don't forget to press the like out there. And if you have not yet subscribed, please subscribe and join our community for everything related to CRISPR and stocks. Thanks and have a great day. Bye for now.